Hey everyone, today we're going to talk about the one big beautiful bill that is currently working its way through Congress. At the moment, it's in the House Ways and Means Committee. So once it gets out of there, we'll get a bill number assigned and we can begin to track it a little bit more closely. But last week they released a draft bill of the legislation. It's close to 400 pages, but I pulled out the most important topics for financial planning, the SALT deduction cap. Currently this stands at $10,000 and it's proposed to go up to $30,000 with this legislation. However, if you make over $400,000 a year and you're married filing jointly, then this begins to phase out. And once you cross $500,000, it's going to be back to where you are this year, which is a $10,000 cap. So still going to have some cap, but not a $30,000 cap, which is going to help a lot of people in high tax states. But even people that, are not in very high tax states, but, you have high property taxes and a little bit more of a valuable property, you hit that $10,000 limit very quickly. I did not see any reference to PTET elections being impacted. Those strategies involve working with your state to have your pass-through entity, if you're a business owner, pay some taxes, and it is a way to try and circumvent the $10,000 cap for SALT deductions. It depends on where you live. Not every state has that available. Another big one for business owners here with pass-through entities, qualified business income. This is going to be simplified and expanded. So number one, it becomes permanent. So it's not subject to being sunsetted like a lot of other things in a reconciliation process bill. Second thing is it's increasing a little bit. So going from 20% to 23%. This simplification comes in once you get over the threshold. So around $400,000 for married filing jointly, you begin to phase out. And it depends on the type of business you have. So for professional services businesses like doctors, lawyers, and accountants, you cross the threshold and you are done. You're no more deduction for you. Do not pass go in the current legislation. Under this proposed regulation, you wouldn't be subject to that. And then in the current legislation with people that don't own professional services businesses, there is a different formula. So whereas you would have been 20% deduction, you have to take the percentage of your wages from the business and then compare that to a percentage of your wages and a percentage of the qualified assets that your business owns, and then look at that deduction amount, and it's probably a lot further away from 20% than you would prefer it to be. So that's going to be simplified in this new bill, hopefully. Roth conversions and tax brackets are going to be impacted. A lot of people have been doing Roth conversions in anticipation of these lower tax brackets being sunsetted at the end of 2025. However, now with the extension of the brackets, people are going to be less eager to get these types of conversions done. And then the standard deduction, I'll link in the description the actual bill, and you can see the one big beautiful bill for yourself. I'd highly recommend taking a look at it. It'd be great to read if you had trouble falling asleep. You could fix that quickly. This is a long way from being done. It's got to make its way to the House and then the Senate, and then probably back and forth, and then the president has to sign it. So we'll be seeing a lot of updates over the summer on this, most likely. Stay here for updates, and we'll see you guys later.